If you waited for 2022 to buy your first home, well, guess what? You're in luck. Because a few banks have started making it a lot easier for you to buy a much bigger home with less money out of pocket. And in this video, I'm going to explain how you're going to be able to take advantage of these new conforming loan limits today to buy your dream home and save a ton of money on your down payment. Welcome back to the channel, guys. My name is Caton Rosario. I'm a mortgage loan originator from San Diego, California. And on this channel, I help people just like you learn how to buy their first home and navigate the mortgage process. Now, if you are new here, make sure you hit that like button, hit subscribe if you want to stay up to date with all the latest mortgage news, as well as get some great educational content that's going to help you buy your first home this year. All right, so let's just jump right on into it. It appears that a few banks are trying to get in on some purchase business and maybe even a little bit of refi business early before the 2022 conforming loan limits actually are announced. It all started last week when PennyMac actually announced that they were going to start accepting loans up to $625,000 and consider them conforming loans, as opposed to the current 2021 conforming loan limits of $548,250. Now, this represents an increase year over year of $76,750. Which is pretty insane considering the increase last year was just about half of that amount. For those of you keeping score, that's a 14% year over year increase in the conforming loan limit. Now, the FHFA in their all-knowing ways basically just looks at a bunch of data, looks at values of homes, and tries to adjust the conforming loan limit to make sure that people still have access to affordable mortgage products, even though the values of homes are continuing to rise. And unless you were sleeping under a rock throughout 2020 and 2021, loan amounts have been going up a lot, and so the prices of homes. So I guess it's not that surprising that FHFA, if they do end up announcing this, is going to be increasing it by almost double of what they did between 2020 and 2021. All right, so that's great and all, but as a first-time homebuyer, why do conforming loan limits matter to you? Well, let me explain. You see, as long as your loan is considered a conforming loan, this qualifies you for 3% down on a primary residence as a first-time homebuyer under Fannie Mae and Freddie Mac guidelines. So for example, in 2021, the maximum price of a home that you could buy with 3% down using a conventional loan was right around $565,000. Now, once these new conforming loan limits come into effect, that means your maximum purchase price can be right in the area of $644,000 with, once again, just 3% down. This is especially big news for those people whose loan amounts were right in that, $550,000 to $600,000 range. Now all of a sudden, instead of having a high balance loan where you had to put 5% down minimum, now you can flip this back over to a conforming loan and put 3% down as well. You're saving 2% in the down payment, which can obviously go towards your other things like closing costs. Now, there are some areas throughout the United States, just like right here in San Diego, that are considered high cost of living areas. And these areas have an additional loan limit amount called a high balance limit before it's considered a jumbo loan. And as of right now, we don't have any leaks or any information on what the 2022 high balance limits are, but make sure you hit subscribe so that you'll get notified when I do end up posting that video once it's officially announced by the FHFA. Now, another big benefit as well of these new increased conforming loan limits is the difference between a conforming and a jumbo loan, or even a conforming and a high balance loan. The difference in rate in those products, even if you're just $1 over that loan limit, is huge. It can be in the area of usually, a quarter, 3/8, maybe even 0.5% in interest rate, depending on how much down you're putting. So not only is this going to allow you to qualify for a much bigger home with less down, but you're going to get a better interest rate as well, which is huge news for homeowners who bought their home in the last few years, bought it as a high balance loan, bought it as a jumbo loan. You might be able to take advantage of these great refinance rates that we still have, luckily enough, and get in before inflation continues to push these rates higher. So I know it sounds like a lot of mumbo jumbo. People are gonna be throwing out a lot of numbers online talking about these conforming loan limits, but what matters to you is basically you're gonna be able to buy a lot more home with a lot less out of pocket, and you're gonna get a way better interest rate in the process as well, at least compared to last year. Now, if you're looking to take advantage of these new conforming loan limits before 2022, the good news is a lot of lenders are accepting applications for these starting today. So that means if you're watching this video right now, you can probably go call up your local mortgage lender and ask them if you can apply for a mortgage loan under the new conforming loan limits instead. And if not, give me a call and I'll hook you up with somebody who can. Ultimately, once again, I think this is a great move from the FHFA. The only surprising thing is how much they are increasing it by. Usually they tend to be a little bit more conservative, and this is pretty much a signal from the Federal Housing Administration. They're saying, hey, values of homes aren't going anywhere fast. This thing is going to continue to rise. We want to make sure that people have access to mortgage products so they can still buy homes using affordable mortgage products. And as a reminder, this only applies really to conventional loans. The FHA, which is ruled by HUD, not to be confused with the FHFA, has their own set of loan limits. Sometimes they follow the conforming ones, sometimes they don't, so make sure that you stay tuned for a video on that one as well when HUD actually announces their loan limits for FHA loans. And once again, as always, VA loans are still limitless. So this doesn't really apply for you from a how much can you borrow standpoint, but this does technically actually apply from a what kind of interest rate standpoint you can get as well. So if you're a veteran with a VA loan, you can get a much better interest rate borrowing up to 625 than you could before. But anyways, I wanted to keep this one short, so I'm going to wrap it up here. If you've got questions about the new conforming loan limits and how this applies to your unique situation, leave them down in the comments down below. I'll be happy to answer any of them. Here's a couple more videos that you think you're going to enjoy, and until next time, I really hope that you stay safe out there, enjoy the process of buying your first home, and I'll see you on the next one. Bye.